Why India is being monitored so closely by global fund managers? Well, one of the reasons for these FIIs to track India as an economy very closely is because we have seen that India's valuations got rationalized in the last 18 months, to be very precise. When you look at the numbers, India was commanding a premium. If you look at the P of Nifty, it was ranging anywhere between 24 to 25, which has come down to below 20 after a long time. And when you look at the overall historical PE of Nifty, it has always been about 20. So one of the thing is that the valuations have come down. Second, the growth of the economy. So despite so much of global headwinds, like for example, the recent war, this oil crisis, which is so far the biggest oil crisis that the entire world has witnessed after 1993. And despite all that, our GDP do not have any kind of repercussion, in the sense that our GDP growth, which is anticipated and projected by even IMF, continues to be at about 6.6%. So that clearly indicates that we continue to grow in line with what was the expected numbers, both by RBI, the Government of India, as well as IMF. That's number two. And number three, the overall allocation of FPIs in India have been at a minimal for the last 3-4 years. Post COVID, we've seen that FPIs have not invested as much as they used to invest in India, and as a result of that, their overall exposure to Indian equity markets, which used to be 22-23% at one point of time, has come down to below 15 for the first time. And on the other side, the retail participation in Indian equity markets, which used to be less than 2%, 3% a decade back, has come to now 15-16%. So another reason is that as you become less dependent on FPIs, as an economy, you are well diversified. As a market, your markets are well diversified. And therefore, as a result of that, some of the long hedge funds, some of the pension funds, where they invest money not for a year or two, but for a decade or two, those money which is sideline, which is sitting on sidelines, are now closely monitoring Indian economy very closely. And once you see this war settling down, this dust settles down, you will see that they are going to come back in Indian equity markets and invest heavily. That's number one. Number two is, where if they don't come to India, the question is, where would they go? One of the point is America. Of course, in US, they've been investing and their exposure is very large to the economy like US. But they also have to diversify. And if they have to diversify, who is better, or who is growing at this kind of rates? So India continues to grow at 6.5%. And when these kind of headwinds are coming on our way, history suggests that these headwinds actually help country like India to grow even more faster. For example, after learning biggest chapter of the economy, that we'll have to really work on renewable energy. And post this crisis, you see the government of India is very clear that they want to invest very heavily in renewable energies and see to it that our dependency on oil goes down eventually. And that has already started happening. For example, you see a lot of motorbikes, they are all battery made motorcycles. You see a lot of innovations happening in solar. We are now ranked as third largest in the world, and very soon you will see that India becoming number one, I mean it, number one solar power energy center. That's another thing. So a lot of work is happening, a lot of money is investing. Yes, we missed out the rally of artificial intelligence because we are largely a service oriented economy. But very soon you will see that some of the companies in India will start investing heavily in AIs, and as a result of that, you will see that things will shape up big time in India. So my sense is that now that markets are Nifty is ranging between 23,000 to 24,000 because of the fear that blend crude prices will go up beyond 100. But then once you see that settles down, you will see a very sharp recovery have coming back in Indian equity market. So I think the worst is behind us, and we are overconfident as a house that now things will start shaping up in India. With that, I'd like to conclude my video here, and thank you so much for giving me your patient hearing. My name is Vikas Agrawal and I am the founder of AltPort. Alt is your alternate and Port is your portfolio management services, and we are emerging as one of the largest platform for investing in alternates. We've got about almost 1650 AIFs listed on our platform. We've got about 1250 PMSs which exist in India, and all of them have been on the platform of allportfunds.com. And then we have close to 350 GIFT City funds and close to 17-18 SIFs. All of them have been registered. So I think this clearly indicates that we are very committed to develop the alternate investing culture in India, and we continue to add more value to all our investors through these kind of videos. So thank you so much once again for watching. Thank you.